Hello everyone! So, we've just got $1 in our account and the market is just cruising along with no clear direction. It's almost like watching paint dry, right? But hold on, let's not jump right into conclusions just yet, because in today's video I'm gonna show you why this might not be as bleak as it seems. So, get along with me, no need to drag this out, and let's dive right into trading. Alright folks, here we go. I'm opening a trade for a downturn, my friends. Let's take a closer look at the chart zoomed in. First things first, we've got a long-term downward trend with low volatility. Now, let's check out what the indicators are telling us. We can see a bit of a correction happening and the chart is approaching the upper boundary of the Keltner channel. MACD is also indicating that there is not much of a tug of war in the market. Its lines are more like tangled spaghetti than crossing swords. Pay close attention to this indicator so you don't get fooled. And when volatility is dead, breaking out of the Keltner channel isn't really worth it. So after this correction, the next move is likely to follow the trend, which is down. I'm expecting a drop to the middle line of the Keltner channel or even lower. Now, my prediction is playing out on the chart. Notice that Williams is only now signaling an exit from the oversold zone. And great folks, we might not have made it to $2 yet, but we're on the right track. I'm increasing my investment size and let's move on to the next trade. So let's switch gears and look at the Euro/Australian dollar currency pair. We're going to open a trade for a downward move here as well. Now what we see here is a correlation between currency pairs, and the situation is pretty similar to our previous trade. The chart has approached the middle line of the Keltner channel, which is also a resistance level. And so I'm expecting a bounce off of it, following the trend. While we keep an eye on the trade, let's chat about a trading phenomenon, the flat market. You've probably heard of it, right? Also, you guys, make sure please to subscribe to my Telegram channel. Link is in the description below. There I often discuss topics like this. And now let's talk about flats, because there are a lot of myths surrounding it. So there are two opposite schools of thought. Some say absolutely not, and others say why not give it a shot. So, what's the truth? We'll get back to that later, actually, for now. And another trade has closed. Let's acknowledge that and put it a little over $3 for our next investment. So here's the deal, folks. Both viewpoints have their place, but it's crucial to understand the context. Usually beginners type "what is a flat in trading" into their search engines and read tons of articles without knowing who's writing them and for whom. Now back to trading. I'm opening a trade for a downward move. Honestly, I don't see any reasons for changing the situation. In fact, this candle right here, breaking through the lower boundary of the Keltner channel, suggests further downside testing. Our target is this support level, so I'm expecting the price to head in that direction. Let's keep an eye on it. And back to flats. So the first thing to understand is, what kind of market are we talking about? The classic stock market involves trading actual assets. You buy for $1, sell for $2. You've made $1. That's how it works. If I were trading on that kind of market right now, any sane trader would be scratching their head, right? And friends, we'll continue this discussion later, because for now, let's acknowledge that we've closed another trade in the green. Our deposit is almost $7. I'm going to increase my investment size to match that and continue the conversation. So, in the stock market, all right, the asset value is crucial, or more precisely, the difference in value. Even futures contracts are tied to price differences, although the system there is a bit different. Trading in a flat market on such markets is nearly impossible. Imagine you bought an asset and its price went up by 10 cents. pretty much what we're experiencing right now. But for each trade, you have to pay a broker's commission. Commission sizes can vary. Usually it's a fixed fee, and sometimes that fee can end up being higher than your profit. So essentially, you're in the red for making the right trade. Naturally, you might wonder why such trading exists at all. Friends, okay, let's get back to our trading. We're here to make money, after all. I'm opening another downward trade. As you can see, the chart can't even break through the middle line of the Keltner channel. It's clear that it's starting to bounce off it, as you can tell from the candlestick patterns. The middle line of the channel, as I mentioned earlier, is a strong resistance level. When candles touch it but don't break through, that is a good signal for a bounce. So, opening a trade from this line is a pretty solid strategy in a sideways market. And let's keep an eye on it and get back to our discussion. You could say that not all flats are created equal, and there can be quite wide price ranges during these periods. So why not buy assets during such situations? Even if the profit per unit is small, you can go in with a larger volume, right? So we already have a deal close to completion. Let's take a break and wait for this moment. And another profit for us, my friends. We're now at $13, so we'll move that into our investments and keep going. It's essential to understand that during a flat market, there is low volatility, meaning there is no one in the market. If you enter a market with a significant amount of money, you will simply drive up the price. It will rise and the flat will end. But who will you sell to if there is no one else in the market but you? Just a few people with pocket change. That will not be enough to buy back your assets. And by selling a large volume with a small demand, you will lower the price again. So let's open a trade for an upward move. Well, darn, that slid through. This isn't how I plan to trade right now, but let's see, folks. Unfortunately, these kinds of slip-ups happen, and we need to be prepared for them. At the very least, don't trade your entire deposit to avoid losing everything at once. Alright, let's figure out why I'm trading for an upward move this time. So the chart has reached a support level. It would have been better if the trade had opened closer to it as I initially planned, but things don't always go as planned. Remember that. So I expect a bounce from this level since volatility is currently low. Like I said, there is nobody in the market. Indicator signals are a bit delayed for now. But there is still enough momentum for the price to reach the level I want. Luck played a part here, to be honest. Nevertheless, the forecast was correct and I'm now in control of nearly $25. And let's continue our conversation and work with this pair. We concluded that trading physical assets in a low volatility market doesn't make sense. So, on one hand, when people advise against opening trade during such times, they're absolutely right. However, in binary options, we don't have a physical interaction with assets, we trade predictions of future prices. Okay, let's go ahead and open another downward trade. Basically, we've been through this story before. The chart touched the middle line of the Keltner channel and then bounced off it. Predictable movement, so no need for further commentary. So, binary options involve trading predictions, but they aren't tied to price differences. All we need is to determine where the price will be in a minute or an hour, higher or lower than the current level. We don't influence the price since we don't directly interact with the asset. And also, we absolutely don't care how much the price changes in real terms. What matters is the fact that it changes in the right direction. Your profit will be determined by the investment volume you've contracted. That's why trading binary options in a flat market can sometimes be super profitable. Why? We'll talk about that later. So our trade has ended in a profit, but I suggest looking for another pair to trade. Our strategy here has run its course, the bounces from the levels are already too pronounced, and MACD has been in a growth phase for way too long. A reversal to the upside is possible, but with low volatility it'll be challenging to predict the expiration time. So let's open a new trade, friends. I'm predicting a decrease in the price of quotes. We can see that the price has been slowly rising for the last 15 to 20 minutes. During this time, Williams has been in overbought territory and has now exited it. Based on the red columns of MACD, I conclude that its lines are converging and there is a possible top-down crossover. Our trend is downward, so we consider the recent rise as a correction and expect the price to return to the middle line of the Keltner channel. So why is a sideways market advantageous in binary options? It's simple, it's a calm market. There are no crazy jumps or survival races. All I need to do is to find strong support and resistance levels and trade from them. The key is to monitor price behavior at those levels. So we've got $87 in our balance, friends. The results are fantastic. I'm increasing the investment size and moving forward. So let's move on to the Euro/British pound pair. Here too we'll open a trade for a downward move. You should already see the reasons why. Based on MACD we can infer low volatility. The red columns indicate a signal for a decline, and Williams is getting ready to exit the oversold zone. So I'm currently expecting a correction and a bounce from the resistance level. The target is the middle line of the Keltner channel, and we've already seen this scenario multiple times today. In general, if we talk about the market as a whole, it is mostly one big sideways movement. According to various estimates, the prices stay within a range about 60 to 80% of the time. So the strategies for trading binary options and actual assets differ radically. We'll get back to that later, but now the trade is nearing closure. We already have $143 in play. Let's increase our investments and look for a new opportunity. Friends, let's open a trade for a downward move. We've discussed similar situations many times before. We can see low volatility, the price near the middle line of the Keltner channel and Williams below the oversold zone. But I want to draw your attention to this candlestick pattern. It's called a star. I don't remember if it's a morning or evening star, whatever. In any case, it's an additional signal for a decline. Now let's continue talking about strategies. There is no point on relying on strategies used by traders in the stock market. The reason is simple. They capture trends and look for entry and exit points. In a sideways market, there is no trend to catch, so you have nothing to capture with that approach in every sense. While I've talked about trends today, they are medium term and more like a guide for the direction of the chart in my time frame. So I'm closing another trade right now. We've got almost $267 in the balance now. Let's search for a new opportunity. So let's move on to the heavily negotiated currency pair of the Australian dollar and the Swiss franc, my friends. We'll open a trade for a downward move, and here. Let's take a look at a very interesting pattern. Let's draw a line. No, not like that. Why is it so difficult? I'm nervous, my hands are shaking. This happens when you go all in on your deposit. Another attempt, we're drawing it on 1, line 2, and we've created a pattern. This is a chart analysis, so it's like a triangle. Such pattern is a signal for a downward move. Near its apex, volatility increases and there is a breakout of the resistance level. So in this case, I expect an exit from the sideways movement and a breakout of the level, or at least the minimum target would be the lower boundary of the triangle, which is a support level. Also notice that the lower boundary of the Keltner channel coincides with the level right now, so you could have also used that as a reference point. And let's keep an eye on the chart. I still want to wait for the level to be breached, and we've discussed that trend strategies are useless in sideways markets because there is no trend. So friends, it is evident that even trend indicators are often useless, as we see, or rather not like that. They are useless if you interpret their signals literally as per the menu and don't adjust for the overall market situation. See? So strong volatility is starting. We can see it in the candlesticks. I think it's time to open a downward trade in anticipation of the resistance level breakout. As you can see, if you expand your toolkit and apply not only indicators but also chart and candlestick analysis, you significantly increase the accuracy of your forecasts. Let me draw our triangle more humanly this time. It didn't go very well last time. Here we go, one line and another line. We're approaching the apex of corner of the triangle, so volatility is increasing significantly, and further movement in case of the chart breaking the resistance level will be substantial. Also, pay attention to the indicators. Williams is already in the transitional zone and the MACD lines are divergent, as indicated by the red columns on the histogram. Great, the chart broke the level. Strong movement hasn't occurred yet, but it will happen later. I suggest moving on to the next trade for now, increasing the investments. Alright friends, we're opening a downward trade. Let's understand the reason behind this action. On one hand, it seems like we have an upward trend, but we need to assess the chart as a whole. As you can see, there was a strong rise about an hour ago. Do you see the candles on the left? In general, the chart is currently moving within such a price corridor, like this one. Therefore, I expect a bounce from its upper boundary, which coincides on the chart with the middle line of the Keltner channel. So, which indicators to use in a sideways market? The answer is simple, the ones you understand. I know that such an answer frustrates many, but I will try to explain. Today, MACD seemed useless. It didn't catch trends because there were none, but I used it to track volatility. Volatility is, I must say, really low today. But we have $1,594 on the balance already. Let's increase the investment size to the maximum possible 1,000 and observe the price. I'm opening another trade for the same reasons. Last time my forecast didn't fully work out, so I expect a similar movement. So I'll continue talking about indicators in the meantime. Trend indicators like MACD can be useful because sideways markets always come to an end and you need to catch that moment. Even if it happens just once during a session, it will save you. Oscillators are very useful too. They allow you to track support and resistance levels in a sideways market and provide a signal for a trade. Also super useful are indicators like the Keltner channel. There are also Bollinger Bands or fractals, but the essence is the same. In a sideways market, they help define the price range during a flat period and identify market reversals. And yes, it's a trend indicator too, but the essence, as you'll agree, is somewhat different. Alright, the trade closed. Everything seems fine, but I'm not happy with the chart's behavior. The forecast is taking too long to play out, so I suggest moving to another pair. So the Canadian dollar and yen forex pair is next. I'm also trading this pair downward. If I'm not mistaken, all the trades today have been downward. So let's draw. Here we have a resistance level that the chart is trying to break, but it clearly lacks strength and volatility is absent. Therefore, much like in most of today's trading, I expect a bounce from this level. And if you pay attention, the moving average is gradually turning around, which might indicate a possible trend reversal also. Alright friends, returning to indicators. I want to remind you that in my previous videos, I reviewed various indicators, so please review those. They are still all relevant, it's classic, and we're moving forward, friends. So, in the United States dollar / Japanese yen forex pair, I'm opening a downward trade. We've discussed similar signals before. Let's repeat for reinforcement, okay? There is an obvious resistance level around which the chart is wavering. This level coincides with the upper boundary of the Keltner channel. And the long-term trend is turning downward, so I don't believe in a breakout of this level right now, considering its strength in this context. I think we'll head down to the middle line of the channel or lower. So MACD and Williams are lagging a bit right now, unfortunately, but this is a vivid example of prioritizing their signals in the system. First and foremost, we'll look at the Keltner channel and the levels, and only then at MACD. But friends, this statement is only relevant in the current sideways market, alright? We have $3,664 in cash. Let's not break our tradition and trade downward. The market sentiment is bearish today. Let's look at the chart. So in this scale of the chart, we clearly see a support level. It's important to grasp this to determine our targets, okay? There was a significant drop to this level. We can see it even via Williams. Additionally, there was a pronounced intersection of the MACD line, followed by a fairly strong correction, considering the height of the last candle. I believe that the decline will continue from the upper point of this candle where we opened the trade. At the very least, the chart will return to the support level, or it might break through if there is enough strength. The timing of the trade opening was calculated correctly, therefore, even though the movement is weak, the forecast turned out to be precise. So, guys, let's wrap it up and summarize, alright? Alright friends, see, trading on the flat market is not a death sentence. You can actually make excellent money here starting with just $1. Today, we've made $4,424, and this is an outstanding result in my view. If you're interested in achieving similar results, please follow my Telegram channel. There I'll share a link with you that will get you a 50% deposit bonus for free when registering on Pocket Option. Additionally, in my Telegram channel, I share daily trading signals, breakdown indicators, all of that good stuff, and discuss trading systems. I hope you enjoyed the video. Please don't forget to like it, comment down below, hit the subscribe button, click the notification bell icon so you don't miss out on any new ones, which are also very useful, and we'll definitely catch you in the next video. Until next time everyone, and bye bye.